Hey, what's happening, guys? Dan Darrow here with another options and play video update. Sometimes you are lucky enough to catch those huge gaps on an earnings report or some other event, right? Stock has a massive gap, whether it's up or down. You are in options at the time and you make out like a bandit, right? Amazing. Like, I always love when that happens. But sometimes you're not involved, whether you just weren't watching it or you didn't think it was going to move, or maybe it goes completely in the opposite direction of what you were anticipating, right? I mean, there's plenty of gaps that I miss entirely, and while it would have been nice had I been involved, it doesn't mean that I don't continue to keep looking at it, right? Because those huge gaps do create opportunities for trades on both ends of the or both sides of the table, right? So whether you think if it gaps up, you think maybe it retraces or maybe it continues, right? I keep watching them after those huge gaps because I am looking for one of my favorite trade setups, and that is the 820 catch-up trade, right? And you probably have heard me talk about it. If you haven't, just quickly, what the 820 catch-up trade is the combination of two moving averages closing that huge gap, or closing in on like the stock after a huge move, right? And I normally give priority to these types of patterns on stocks that have had some huge catalyst. So if they're just kind of in a trend, then this type of pattern it's not as clear of a signal. But after like a huge gap up or a huge gap down, this type of pattern really moves into like one of my favorites. So it's like a top five trade pattern that I'm looking for, right? And again, just very quickly, what the 820 catch up is in this case of AMD, using this as an example, you see you had the stock go kind of parabolic into earnings and then a huge gap and continue to run after earnings, right? So if you were in it, amazing. If not, right, like for me, like I wasn't in it like on the earnings report because it was just too much. So I was watching it for a trade after because I knew it was moving in. I wanted to participate in it, right? So the green line is the 8 day EMA. All right, and what I like to see is the EMA, the 8 day EMA, catch up to the trade, so catch up to the stock, right, and start to put a higher floor on that name after the big gap, right? So you can see that the 8 EMA really started to provide like a nice level of support after it caught up to it at the beginning of August, right? And then what I'm waiting for is the 20 simple, so that's the pink line here. So that's the 20-day simple moving average to catch up, right? And basically what I find is the combination of these two moving averages, so the 8 EMA provides the early floor, and then when the 20 catches up to it, that's when you get like the surge or like the turn, right? Because you have the rising pressure from the combination of the two moving averages. And I find that that's what really kind of triggers the next move higher, right? So in this case, you can see when the 20 really start to caught up, that's when like the slope started to turn higher, right? And then today was like the big breakout to really pay people that were sitting long or trading for the bull flag breakout. On the opposite side, you can also view it as negative if it were to lose a 20 days. So with like the pattern, right, I'm looking for the 20 to kind of force it higher and trigger like the next leg up. If it were to lose the 8 and then lose the 20, then I would consider that a net near-term negative, and that might be a point where I actually look to short. So a pattern like this, if it had lost the 20 day, then I might be looking to short, thinking it lost the higher support levels and maybe it can start to roll over, right? But generally speaking, I typically want to go with the trend. So if it's a huge gap up, then I'm looking for another leg higher. If it was a huge gap down and the 8 caught up and then the 20, then I'd be looking for another leg lower. So most of the time I'm looking to stick with the trend. But this is one of like my favorite trade setups on stocks that have had huge gaps. It's the 820 catch-up trade. I've talked about it a lot. Um, this quarter and actually last quarter, it played out a bunch of times because so many of the names have had big gaps or big runs. And we don't have too many of these to the downside, unfortunately. But trades on the upside still working, so we're going to stick with what works, right? So if you like this video and you're looking for more information on option swing trades or option trades for earnings, please follow up with the link in the description of the video for more information on options to play. Hope you have a great night, stay well, and I will talk to you all tomorrow.